So today, the Federal Reserve decided to continue to pause and not cut interest rates. What's going on, guys? It's Ricky with TechBud Solutions. Let's go ahead and quickly talk about it. So why is it, if the Federal Reserve decided to not cut interest rates, which is what the market has been wanting, why is it that the market reacted in a positive way? And I'm going to share my thoughts with you. Again, it's just my opinion. Let's go ahead and just jump right into it. The biggest thing that I have to say is nothing that was said today was a surprise, right? When it came down to the 4.5%, for those that did not know, the expectation was 4.5%. We were at 4.5% and we came in at 4.5%. There was no surprise there, right? Like we talked about earlier, there was a 100% probability that the Federal Reserve was going to pause. That was expected, not much of a surprise. That was the rate decision. And then 30 minutes after, like you guys saw, we live streamed that FOMC meeting. And during that FOMC meeting, the market reacted in a positive way. Once he stopped speaking, surprise, surprise, the market began to correct. We actually caught it all within our live session. I openly shorted Tesla. Feel free to check it out. It was actually not that good of a trade because I entered too early. Nonetheless, I still came out on top. But the thing that I really want to talk about is the sentiment. So the first thing that I want to highlight is, well, then why did the market react in a positive way if this was nothing new? Well, markets have been incredibly oversold, right? We've been consolidating down here, and that's one thing that we have to recognize. It doesn't matter if you're a bull or a bear, you have to approach this in an unbiased approach, right? And when looking at that, if things are not getting worse, then why can't the market get better? Remember, the stock market is viewed as a leading indicator. As long as there's no more talk about trade war or tariffs, then should there be more fear that's being instilled into the market? The second thing to really begin to ask yourself is, what did Jerome Powell say? In my opinion, what he really focused on was kind of just issuing confidence to the American people that, hey, we're actually not doing that bad, regardless of what the consumer sentiment report is saying. And I feel like there was a really big focus on that consumer sentiment report more now than there has been in the past before. Because when asked the question, hey, how do you see our economy doing? He was very positive about not only how it's doing, but the potential outlook. He did acknowledge the potential volatility with tariffs that might impact the overall market, but he thinks that it's going to be short term. Feel free to rewatch it if you need to. But the biggest takeaway that I had when, it was kind of hard to capture it when I was watching it live of, hey, why is the market reacting in a positive way? Nothing of this is new. So it's like, well, why is it reacting, in a bullish way? Simply issuing confidence that, hey, we are making progress, economies are doing well, and we do have inflation under control. So as the central bank kept the federal funds rate, again, at the same, a decision that was widely expected. That said, that the federal kept its outlook for its two rate cuts coming in the remainder of this year. And again, that's not a surprise. We all knew from the end of 2024 to the start of 2025 that the Federal Reserve had two rate cuts planned for this year. So that is not a surprise. That, in my opinion, is not to support the case for the market to recover. But the big concern that I feel like a lot of people had was because of this trade war and the tariffs and how they can impact the market is like, hey, should people be worried? And in my opinion, I think Jerome Powell was there just for the voice of confidence of, hey, this might provide or present some form of short-term volatility, some short-term inflation. We'll figure it out as it goes along, but overall, our economy is doing well. He really focused when answering the question about unemployment. There's a lot of data that's coming out that is showing the case that, hey, unemployment is still historically low if you look at the number. But a lot of people are struggling to get jobs. I'm not sure if you guys saw that statistic, but it said about 25% of Harvard graduates that graduated last year are still struggling to find a job. How is that possible if unemployment is relatively very low? And he is stating that his answer was that not only is unemployment historically low, yeah, you might not be seeing a bunch of jobs being open and people might be looking for jobs for a longer period of time, but you're also not seeing that many people laid off. So again, that was a big focus in the way that he was saying that things are kind of balancing out. So everything that when it came back to rewatching that video and answering the analyst questions, all he continued to kind of like answer it with was confidence that the economy is doing good. They're going to take things meeting by meeting. And these were his words. The economy is strong overall and has made significant progress towards our goal over the past 2 years, Federal Reserve Jerome Powell said during a press conference today following the rate decision. Labor market conditions are solid and inflation has moved closer to our 2% longer run goal. Again, their goal is to get inflation down to 2%. As of right now, I think we sit at 2.5 or 2.7. What was it? It was like 2.5, 2.7, something like that. We came down from 3% or 2.8, I think we might be at, though it remains somewhat elevated. So he acknowledged the volatility that tariffs and might present, but the biggest thing is that there was just confidence that was presented, even though that the consumer confidence was coming back a little uncertain. And it doesn't really surprise a lot of people because of how much the market has been reacting to it for maybe consumers with the consumer sentiment report. It might not surprise a lot of people that, people might feel unconfident about the economy when they're seeing that these series of tariffs are being presented. A lot of volatility is being presented into the market. So he was there, in my opinion, just as a voice of confidence where nothing new was said. It was just to kind of like reassure people that things are not as bad as they were presented. He talked a lot about headlines and how different news articles obviously present things to try to get, clicks. Nonetheless, again, markets were incredibly oversold. News was not bad. News was not negative. There really wasn't much that he said that, in my opinion, would have driven the market down. I mean, there were no more rate cuts expected for 2025. So I thought that was a hope that the market had. But of course, it just wasn't worse than what they potentially expected. So again, markets showing somewhat signs of a recovery. I want to pay attention to this. But before I let you guys go, I want to see, because nothing new is going to happen, right? Jerome Powell went live. Jerome Powell answered questions. The thing that I've picked up on very often is I want to see if markets continue to recover, and if so, and if not, how they can use the same headline of what Jerome Powell said yesterday or what he said today, and to see if that in any way begins to instill some uncertainty into the market. We see it all the time where the initial reaction might be one way, but then once markets begin to fall, or if they do begin to form a lower high and continue to sell off, there begins to be a different edge that is now being presented. So just be careful, pay attention. This is not to scare you. Like I said, today, when it came down to what was said, was not bearish, but it was just nothing new. Jerome Powell did a great job trying to present confidence for the American people, and I can see why the market now reacted in a positive way. Do I think it's ultimately going to change and make the market recover? No, I think we do need to see more change and confidence actually being instilled into the market, but we're possibly in the very early stages. I just wouldn't be sold on the idea that we have to recover right now. So if you want to take a long position, again, nothing wrong with that. Just be mindful of your position size. There's huge recovery potential, but again, things can always get worse before they get better. And you guys know that I'm always here to talk about both sides. I'm excited to see how tomorrow the markets continue to trade. Do we continue to rally as they have been during the aftermarket trading sessions? Or does fear begin to get instilled? Do we get a crazy tweet from Trump that begins to send markets into free fall? So excited to see tomorrow for our live trading session. I hope to see you there. And that's that second link in the description down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.